we should encourage saving. As you know, in relation to the GDP, we are aware that Pakistan has one of the lowest saving ratios across the region. We need to promote savings. We need to promote the bachat concept. Small amounts regularly, consistently. We have to make it convenient for the masses, for the citizens of this country, and we need to encourage them to start saving. And banks have to play a very important role of offering competitive returns on those savings to the customers. But again, digital transformation, digital technology makes it very easy for the younger generation, for the housewife segment, for the financially excluded segment to start saving. The concept of lifestyle banking is basically bank being there seamlessly in an invisible way of wherever your life is taking you. So if you're traveling, you want to buy a smartphone from your preferred vendor at a price of your liking. Bank has to be there seamlessly and in an invisible way, not prominently, in an invisible way at the back end to make that happen for you the way you want. Now that's lifestyle banking. That travel, entertainment, education, health. Bank has to be invisible, but be there all the time for you, the way you want. We have to make it so convenient for the customers that the banking or the financial needs are being served first and foremost, and then you take care of the lifestyle aspects, again related to payments, financing, savings. So this model has worked where banks have woven themselves in the customer lifestyle experiences in a way where they become invisible. The product takes the center stage, and then bank is simply the enabler or the facilitator. So you can't take the freedom away from the customer. You want to choose your own airline, you want to have your own itinerary, and you want to shop online across multiple travel agents, both within Pakistan and outside, and you want to buy a ticket, right? Now, bank cannot expect you to come to the banking portal or app and go through those few select partners to buy a holiday of your dreams, right? So bank, in fact, should be there with you throughout that journey of selection and going for a dream holiday for your family. And whatever you decide, bank, a digital bank of tomorrow, should be able to facilitate in your decision. I think we need to go back to the drawing board and see how we can enable these small merchants to come onto this digital rail. So it's a great thing to have the payment gateway, and I think credit goes to State Bank again for spearheading all this, and it's an amazing initiative, the RAS payment gateway. But the bigger challenge is how to now ensure that the bottom of the pyramid, the S of the SMEs, the small merchants and traders, they become comfortable, they become part of this ecosystem. There are obviously tax considerations. There is tremendous amount of effort which is required to create awareness, to handhold them through this journey, to educate them and tell them about the benefits. Then there's a cost element, which has been very prohibitive, right? So we've been toying with the idea of introducing QR in Pakistan. Nobody is thinking that, why QR as a technology or as a payment initiative hasn't been successful in most of the world. There are only a handful of countries which have adopted QR. So we need to understand and study those reasons of why that technology not becoming successful and not being adopted by the rest of the world, right? And why they've leapfrogged onto the mobile tap and pay technologies. Why the debit cards are still the largest and the most widely used instruments, because for merchants it's a matter of they're running profitable business today, so they don't want any friction or any hindrance. They want seamless customer experience, which a debit card or mobile tap and pay in developed market that's offering them. We still don't have investors investing in this area of empowering these merchants with the right technology. We are still stuck with the traditional POS terminals, those devices, which have been outdated, in other markets. So unless we crack this, we make it financially feasible for the merchants and for the customers, it will not take off. Unified KYC as a use case is going to benefit the whole industry tremendously, right? So it's already in play. A lot of work has been done on this, and again, with the blessings of PBA and State Bank. Now, that's something where collaborative banking will bring about tangible results and benefits for the industry as well as for the customers. So that's an area where I think we should all collectively put our efforts as an industry to see that through. Digital credit scoring is another. Consolidated credit score, the likes of Experian, for example, in Europe, where every individual has a credit score and it's accessible by financial institutions, non-financial institutions, and then there's a collective effort of, on a real-time basis, offering solutions and products to those customers on the basis of that, collaboration of the entire industry. But other than that, in terms of innovation, in terms of trying out new use cases, yes, I agree with you. For us, there's been a dearth of startups. Over the last 2 years, situation has changed. So the kind of traction we were seeing 3 years back, unfortunately, that has dried out a bit. I'm hoping that now with some stability, we should see a revival of that. Foreign interest is very important because, to my earlier point, we have a lot to learn from the use cases from elsewhere. If you're part of the global village, we cannot expect to create or innovate something which hasn't happened elsewhere. So we need to remain open and we need to learn from those markets on those use cases which have worked well for them, at least similar markets, if not too advanced markets. So that's why it's very important that we encourage this FDI in these areas. I know a lot of work is happening on the credit bureau and financial inclusion when it comes to small loans, lending. But there's nothing significant that the industry has been able to collaboratively work on so far. So you cannot rely on tried and tested methods to build the future. So you need to be brave, you need to be bold, and going into partnerships, even foreign partnerships, again, because the only reason being they have been exposed to much more mature, complex situations, and we have a lot to learn from. So I think this cross-pollination, cross-border exchange of information is very crucial. We need to encourage making use of investments, data, information out there, which can help us, fast track on our journey. So the fundamental thing for us, where a lot of banks globally have gone wrong 5-6 years back when they started off in this digital journey, is that they focused more on developing a digital strategy rather than focusing on the business strategy for the digital world. The business strategy has to be solid. It has to be articulated for today's world, for today's competitive landscape, for the opportunities that we have, that the technologies of today have enabled, the information age has enabled. So there has to be a business strategy supported by digital. What are the shareholders expecting? They're expecting the return on the business. And if digital is the answer, so be it. But maybe digital is not the answer. I'll give you an example of RPA. Similar technologies, not just in Pakistan and elsewhere as well, where the labor is much cheaper to get, access to good talent is much cheaper, technologies have failed, at least for the short term, because they're not able to introduce operational efficiencies at a cost-effective manner. So unless you make it financially feasible for the shareholders, you make it attractive for them, digital or no digital, that's irrelevant. In Pakistan, when it comes to putting your savings, your hard-earned money with a trusted name, customers still expect face-to-face interaction. Customers, they demand actually because of that trust, that confidence that they expect, they need that face-to-face interaction. Hence, branches are here to stay. And that's why we see this growth in the branch network in the industry as well. Because number one reason is this is what the customers are expecting. That's how they want to bank in Pakistan. In other markets as well, this has gradually evolved because when it comes to deposit placement, conventional banks have done far better than digital only banks when it comes to deposit mobilization. Digital banks have done very well when it comes to lending, because when you're lending to someone based on algorithms, based on digital scoring, the borrower is not concerned about a trustworthy name. What he's interested in is the best price, the best terms for the loan. And if it's coming from a startup or from a FTSE 100 company, he's not that bothered. But when it comes to deposit mobilization, it completely changes. The equation changes, because that's where the trust factor plays a very important role. And for that trust to be established in a country like Pakistan for the foreseeable future, branches will remain the key interaction point for the customers. The way these interactions should change in the branches is that now the branch staff should start looking customers in the eye rather than at the instrument, right? Rather than being focused on that transaction and not giving attention to the customer needs and not having that empathy for that customer. So that is going to change in the branches. So I think in branches in Pakistan as well, there is going to be a shift. We call it customer service, but it has a much broader implication, that treating customers as family members, as friends, rather than getting overwhelmed with the transactions, the immediate need, which digital should take care of.